Module 5, Cashflow Forecasting, Short-Term and Long-Term Planning. A. Definition of cash flow. Forecasting. Cash flow forecasting is the process of estimating future cash inflows and outflows over a specific period based on historical data, business trends, operational plans, and anticipated market conditions. Short-term forecasting typically covers daily, weekly, or monthly periods. Focus: operational liquidity, immediate obligations, and working capital requirements. Long-term forecasting typically covers annual or multi-year periods. Focus: strategic planning, investment evaluation, debt servicing, and capital expenditure planning. Insight: accurate forecasting ensures sufficient liquidity, supports operational decisions, and enhances financial stability. B. Importance of cash flow forecasting: anticipates cash shortages or surpluses, enables proactive planning to address liquidity gaps or invest excess cash, supports strategic planning, guides capital expenditures, expansion decisions, and financing strategies, enhances working capital management, aligns operational activities with cash availability, reduces financial risk, minimizes reliance on emergency funding or short-term loans, improves decision-making, provides data-driven insights for management on operations and investments. C. Components of a cash flow forecast: cash inflows, sales revenue, cash and credit collections, loans, investments, or equity injections, other operating receipts, cash, outflows, payments to suppliers and employees, interest and tax obligations, capital expenditures and loan repayments, net cash flow, difference between inflows and outflows. Positive net cash flow indicates liquidity surplus, negative indicates potential shortages. D. Forecasting methodologies. Direct method forecasts specific cash inflows and outflows for each period, suitable for short-term operational cash planning. Example: projected collections from customers, payments to suppliers. Indirect method starts with projected net profit and adjusts for non-cash items and working capital changes, suitable for long-term forecasting and strategic planning. Rolling forecasts: continuous updating of forecasts as new data becomes available, enhances responsiveness to operational changes and market conditions. Scenario and sensitivity analysis evaluates different what-if scenarios, e.g., changes in sales volume, payment terms, helps anticipate potential risks and optimize decisions. E. Key drivers of cash flow: revenue cycles, timing of sales and collections, payment cycles, supplier payment terms and timing, operational efficiency, inventory turnover, receivables collection and payables management, financing activities, loan repayments, interest payments, and equity injections. External factors: market trends, seasonality, regulatory changes, and macroeconomic conditions. Insight: understanding cash flow drivers is essential for accurate forecasting and proactive liquidity management. F. Challenges in cash flow forecasting: inaccurate assumptions about sales, payments, or costs, volatile market conditions affecting revenue and expenses, delayed or incomplete data leading to unreliable forecasts, seasonal fluctuations not properly accounted for, poor integration with operational planning resulting in misaligned cash availability. Module Insight: overcoming these challenges requires robust data analysis, regular updates, and integration with strategic planning. General: practical applications: short-term liquidity planning ensures sufficient cash to meet operational obligations. Debt and investment management plans loan repayments, capital expenditures, or new investments. Working capital optimization aligns cash availability with operational needs. Risk mitigation anticipates cash flow shortfalls and allows timely corrective action. Strategic decision support provides management with reliable information for expansion, mergers, and acquisitions. Summary: Module 5 equips you with the skills to forecast cash flows accurately, anticipate liquidity needs, and plan strategically for operational and investment decisions. Mastery of cash flow forecasting enhances financial resilience, operational efficiency, and strategic decision-making, bridging the gap between cash management and long-term business planning.